investment spreadsheet for a one-bedroom apartment in Evian, Lake Geneva in France, based on an 80% mortgage over 20 years, fixed at 5.65%, will show how it's possible to achieve a return of 481% over the 20 years. The personal funds amount to €35,770 plus €76,640 spread over the 20 years, amounting to a total of €112,414 against a potential valuation of €541,703, giving your 481% return on funds invested. To demonstrate how this investment works, we look at the net price of the one-bedroom apartment with parking at €165,219. The VAT at 19.6% is an additional €32,383, giving the VAT inclusive price at €197,602. The net price of the furniture for €5,485 plus VAT 19.6% shows the VAT inclusive price at €6,560. So the total net price for the one bedroom apartment with parking with furniture is €170,704. With VAT amounted to a total of €33,458, shows the VAT inclusive price to be €204,162. The legal fees at approximately 4% is an additional €8,166, giving the total VAT inclusive price with fees to €212,328. However, under this Résidence Tourisme scheme, the developer is funding the VAT of 19.6%, so the investor pays up only to the total net price of €170,704 plus the legal fees, which amount to a total of €178,870. Now, the French banks will lend 80% of the total price with legal fees, which amounts to €143,096. So the total personal contribution based on the 80% mortgage is €35,770. Now, at 5.65% fixed over the 20 years, with life insurance, this is costing €12,203 per annum. The rental income of 4.5% on the total net price with parking with furniture is €7,682. So the management company Sella, under the 11-year, 11-month lease, pay a 4.5% return, index linked at 1.5% per annum for the duration. The management company Sella are obliged to pay the VAT inclusive rental income, where the VAT on rental income is 5.5% as compared to VAT on the furniture, the parking and the apartment at 19.6%. So the additional 5.5% of rental income, which is €423, must be reimbursed to the French VAT office once per annum, leaving you, the investor, with a net return of 4.5% on the €177.04, which is the €7,682. Now, the annual fees comprise accountancy fee, non-refundable charges and land tax, where the accountancy fee is approximately €220 per annum. Non-refundable charges, which comprise public liability fees and syndic fees, which are the recorded minutes of the annual AGM, and the third fee is a land tax fee or taxe foncière, normally exempt for the first 2 years subject to the developer issuing the H2 form. So the net return after expenses is €7,042 from year 3 on. So from the total rental income of €7,462, which is €7,682 less your accountancy fee for the first year, against the fixed repayment mortgage on the 80% over 20 years, which is costing €12,203, we see a shortfall per annum of €4,741 or €395 per month. This reduces each year as the rental income is index linked to the construction price index. At year 20, we can see that the mortgage is now paid off and the total cost for the duration of the 20 years plus the initial contribution of €35,000 is a total of €112,414 before the mortgage is paid off. The balance sheet shows the expenses that can be offset against rental income from interest on the mortgage, accountancy fees, non-refundable charges, land tax, legal fees, furniture depreciation and building depreciation, which shows a cumulative loss that can be rolled forward each year to effectively show a zero income tax for the duration of the investment. We're assuming a 5% growth per annum, which is keeping in line with inflation, where the price for the apartment after the first year at 5% growth from €204,162 is now at €214,370. After 20 years at 5% growth per annum, the value is now at €541,703. Now, assuming the mortgage is paid off, costing a total of €279,842, the net profit is left at €261,861. However, the net profit is greater than €261,861 because the personal contribution initially is €35,774 based on an 80% mortgage, plus the annual shortfall for the 20 years is costing a total of €112,414. So the €112,414 compared to the €541,703 after 20 years at a growth of 5% per annum is showing a return of 481% on the funds invested over the 20 years. So this is effectively where we're showing a 4.81 times return on monies invested over a 20-year period.